Hello, this is Business Now, reaching you live from IBrandTV News Studios in Lagos, Nigeria. Coming up, African Development Bank projects average growth rate of Nigeria's economy at 3.2%. Food prices record a 42% surge in 12 months, according to National Bureau of Statistics. International maritime traffic hits record high as SUEZ Canal in Egypt generates about $15 million daily. Ahead of the World Bank warns that Russia's invasion of Ukraine could cause a global recession. Hello again, and thanks very much for joining us. Here are business stories making headlines at this hour. I'm Michael Nath. African Development Bank has projected the average growth rate of Nigeria's economy this year through to 2023 at 3.2%. The projection is stated in African Economic Outlook 2022 report released by the AFDB at the ongoing annual general meeting of the bank in Accra, Ghana. The report, unveiled by the president of the bank, Dr. Akinwumi Adesina, his team and board of governors, examined the economic outlook at regional level and country-by-country basis. AFDB's projection is slightly higher than the 3.11% growth rate of first quarter, as released by the National Bureau of Statistics on Monday. The report also estimates the inflation rate to remain elevated at 16.9% in the year and stay above the pre-COVID era until next year. Last month, the inflation rate jumped to 16.82%, forcing the Monetary Policy Committee to leave the sidelines and raise the policy rate by 150 basis points on Tuesday. The report also warns that the marginal current account surplus of 0.1% gross domestic product could turn to a deficit of 0.2% next year, highlighting insecurity and infrastructure deficiency as major blights on the economy. The Federal Inland Revenue Service, on behalf of the federal government of Nigeria, generated a sum of 532.48 billion naira from company income tax in the first quarter of 2022, an increase of 35.6% compared to first quarter 2021. This is contained in the recently released company income tax report by the National Bureau of Statistics. Specifically, company income tax revenue increased by 35.6% in first quarter of 2022 compared to 392.65 billion naira generated in the corresponding period of 2021. On a quarter-on-quarter comparison, company income tax revenue increased by 53.1% compared to 347.81 billion naira recorded in fourth quarter of 2021. Our breakdown of reports shows that Nigeria generated a total of 209.13 billion naira from local companies, which is 19.2% lower than the 259.85 billion naira generated in the previous quarter. However, it is 37.3% higher than the 152.33 billion naira recorded in first quarter of 2021. The Central Bank of Nigeria says it has disbursed the sum of 57.9 billion naira for the execution of 185,972 projects under the Anchor Borrower's Program. Godwin Emefiele, governor of Cbn, disclosed this on Tuesday at a news conference in Abuja. The Monetary Policy Committee communique released on Tuesday, Emefiele said the funds dispersed over a period of 2 months were for projects meant for the cultivation of rice, wheat, and maize. In November 2015, President Muhammadu Buhari launched the ABD initiative to boost agricultural production, improve foreign exchange, and reverse Nigeria's negative balance of trade on food. Emefiele said at least 4 million smallholder farmers across Nigeria have been supported to boost the production of agricultural commodities in the country. The Central Bank of Nigeria's treasury bills for a one-year tenor worth 143.88 billion naira, which was auctioned on Wednesday, 25th of May 2022, accumulated a total subscription of 210.82 billion naira, representing 147% of the intended capital raise. According to the result of the auction, the stop rate for the 364-day T-bills was 6.49%, which is higher than the 4.7% marginal rates recorded in the previous auction. The Apex Bank recorded a total subscription of 236.97 billion naira for the three tranches of T-bills auctioned as against the 143.03 billion naira intended offer. This represents a 155% subscription rate, which the final aggregate allotment was 173.48 billion naira. A further breakdown of the report showed that the 91-day Treasury bill recorded a subscription rate of 444%, while the 182-day bill was disbursed at a 65 or 61%. Now, selected food prices recorded an increase of 42% in 1 year. Figures by the National Bureau of Statistics have shown. A new report titled Selected Food Price Watch for the month of April 2022 showed that the average price of 1 kilogram of beans, white black eye, sold loose, rose on a year-on-year basis by 44.32%. from 359.64 naira in April 2021 to 519.05 naira in April 2022. Similarly, the average price of 1 kilogram of yam tuber on a year-on-year basis rose by 42.88% from the value recorded in April 2021 to 361.20 naira in April 2022. On a month-on-month basis, it increased from 353.56 naira in March 2022 to 361.20 naira in April 2022, indicating 2.16% growth. In the same vein, the average price of palm oil, one bottle, increased by 45.59% from 578.86 naira in April 2021 to 842.75 naira in April 2022. It also grew by 0.06% on a month-on-month basis. The Manufacturers Association of Nigeria, the Lagos Chamber of Commerce and Industry, and the Nigerian American Chamber of Commerce have criticized the hiking of the monetary policy rate by the Central Bank of Nigeria, saying that the policy will hurt the Nigerian economy. The CBN Governor, Godwin Emefiele, after the third Monetary Policy Committee meeting of 2022 on Tuesday, noted that the committee backed the raising of the benchmark interest rate from 11.5% to 13.5%. This is the first time the Apex Bank is raising the interest rate in 2 years, having pursued an expansionary monetary policy in the last 24 months. To prevent the looming inflation, he said the MPC had to increase the monetary policy rate by 150 basis points. Now, to help analyze the impact of raising the benchmark interest rate, I'm joined here via the phone by Gospel Obele, the CEO of Street Economics, joins via phone right now. Hello, Gospel. How are you? Welcome to the program.
Hello, good afternoon. Yeah, thank you for having me.
Beautiful. Now, for the first time in 6 months or 6 years, the Central Bank of Nigeria raised interest rate from 11.5% to 13.5%. Why is this happening now? Hello, Gospel? Gospel, can you hear me?
I can hear you clearly.
Okay. You got the question right? Yes, yeah.
Yeah, the central bank is currently in a fix. There is a trade-off between, managing a very fragile growth recovery in terms of GDP now, and also curbing inflation or managing inflationary impact on the economy. But it's also important to note that the dynamics of this trade-off are more driven around, structural issues, around the geopolitics, meaning the Russian-Ukraine war, and around the growing commodity prices, and ripple effects from the COVID-19 pandemic. These cluster issues are much more responsible for the cost push, inflationary pressure on the Nigerian economy than monetary dynamics as a standalone. So in as much as, yes, most countries in the world right now are increasing interest rates, the central bank significantly thought to follow suit with that trajectory. But in terms of the mid to long term, I fear that this policy may come back to hurt us, because when you increase interest rate, it benefits the lender, meaning that interest income increases for the investor or the individual who is lending money out. Then for the person who is borrowing, or manufacturers or businesses or those in the real sector who need this financing, will get to a situation where they may need to pay more in terms of interest expense or in terms of servicing debt. So that would discourage borrowing and as well as restrict credits on the economy, which is the central bank's argument, in the sense that inflationary pressure and curbing monetary supply is the interim policy objective for the CBN, compared to quote unquote a fragile growth. So the central bank is looking at options to manage inflation and still deal around retaining its investment that enables for growth and all of that. But then again, we see a situation where if manufacturers or the real economy cannot thrive due to lack of access to finance or increased cost of accessing finance, there may be a challenge where inventories will be sold or given out at higher prices, and that may also affect on quality on price of food and other things in the economy, which brings us back again to the inflationary question. So it may look like a short-term fix, because technically the central bank is in a fix, and the Nigerian economy is way much more complex than other economies in the world. However, I am hoping, with fingers crossed, that this will come back to hurt the economy in terms of inflation, and even worsening the pace and quality of growth going forward.
Yeah, you talked mainly on the economy. What about the individual Nigerians?
Yeah, the impact on the average Nigerian is also going to be slightly huge, because that was a very huge move from 11.5% to about 13, technically 13 to 35.5% and all that. And let's not forget that inflationary pressure is constantly on the rise. Now, it's constantly on the rise because you have more geopolitical impact affecting commodities like wheat, sunflower, soybean, and all that. You even have climate change conversation like in Vietnam, Taiwan, and the likes, affecting quality of produce. And these things are hiking commodity prices, which in turn would sort of like increase price or affect prices of goods and services. So hike in food prices technically affects the average Nigerian, meaning that the average Nigerian will be spending more for a cost of food or a basket of tomatoes and all of that, which technically means that Nigerians may be worse off, not just because of the interest rate hike, but because the economics around the challenge we face right now are a lot more deepening and may affect the consumer in the mid to long term. Also take into cognizance the fact that this is a pre-election year, and with pre-election year also comes its own uncertainties. And in my own thoughts, I would say that the inflationary pressure we are having now and inflation.
Are you still there, Gospel? Well, it appears we're having some technical glitch there. Well, he's been trying to do justice to the
I can
questions.
hear you well.
Okay, you're there right now. Okay, please, could you continue from where you stopped?
Okay, great. So I was saying that the uncertainties around pre-elections, and all of that would sort of shore up liquidity within the system, and that would also call for worry when you look at it from an inflationary standpoint. And at that level, it's no longer an interest rate managed process any longer when you look at it from a money supply. It's now many other economic or socio-economic activities that will be coming together to reinforce. So the consumer or the average Nigerian is caught up in the web of likely increasing costs as we move ahead in this reality. It's quite unfortunate also that it's happening the same time We're expecting, we're looking forward to the next Nigerian general elections and all that. So the consumer is likely to be worse off. We've seen exchange rates also fail. The Naira is almost now exchanging at 610 naira to a dollar in the parallel market. The pound sterling and other currencies are also following suit. So the average Nigerian will be in the heat of this. And let's not forget that the inflationary pressure in the Nigerian economy has been heavy on the basic necessities of the average Nigerian, which technically means that the cost of food, the cost of living, power, shelter, water, transportation are the places where the average Nigerian feels the pressure of increased cost of living the most. So until these economics are gotten right from the context of reducing shocks, and ensuring that Nigeria is much more positioned competitively, to manage the inflow of shocks that are happening globally, we may not be able to transcend beyond interest rate conversations to building a much more robust and competitive economy.
Okay, now the interest rate hike, according to the central bank governor, is intended to slow galloping inflation and save the persistent Naira depreciation. Could you throw more light on this, especially to the man in the street?
All right. Yeah. So there are fears that inflationary numbers or inflation rates would skyrocket, at a faster pace. And that's because there are many inputs, that are facilitating all of that. But then again, I don't think that interest rate as a single policy instrument is enough to manage all the
Well, it appears we've lost contact with Gospel, who's been trying to do justice to some of the questions.
I can hear you clearly.
Oh, you're there. Okay, please, can you quickly round off?
Hello, I can hear you clearly.
Okay, yes. Can you quickly round off? Hello, are you still there, Gospel? All right. Thank you very much, Gospel. You've been trying to do justice to some of the questions we put across there with regards to the increment and rate, which is now from 11.5% to 13%. Now, back to the rest of the news. Importation of durum or pasta wheat into Nigeria has continued to skyrocket, rising from 730.9 billion naira in 2020 to 1.295 trillion naira in 2021. The data from National Bureau of Statistics Foreign Trade Statistics show that wheat importation into Africa's most populous nation rose 77.23% from 2020 to 2021. Wheat is an important commodity which serves as flour in the production of pasta, bread, noodles, among others. Economists said the difference in the 2 years could be attributed to the devaluation of the nation's currency and insecurity that led to little or no production in the northern Nigeria for a number of years. Naira devalued by over 15% in the official market and over 20% in the parallel market in the 2 years. But insurgents and bandits in the north have also sacked farmers of wheat and other crops, leading to supply chain disruptions. Still to come, U.S. Federal Trade Commission fines Twitter $150 million. Details of this and more after this break. Stay with us.